Hi guys, I'm Rich. Let's review my top 5 things to watch for the week ahead in markets. Number 1, RBA rate decision. Australian central bankers will set interest rates for the country on Tuesday. The official cash rate was raised to 3.60% in March, and economists expect the RBA to lift rates another 25 basis points in April. In February, the annual inflation rate in Australia dropped to 6.8% year over year, a considerable decrease from the peak of 8.4% witnessed in December. The Aussie dollar has consolidated around 0.67 in March, but remains well off its high over 0.71 in January, with traders pricing in a likely soon to come end to rate hikes, though not yet. Number 2, RBNZ rate decision. On Wednesday, it's the Reserve Bank of New Zealand's turn to decide interest rates. The official cash rate in New Zealand was raised by 50 basis points to 4.75% in March, and consensus expectations are for another hike at the upcoming April meeting on Wednesday. The price action for the Kiwi dollar has been similar to the Aussie, with the currency down from a double top peak at 0.65 in February to now consolidating around 0.62. Number 3, OPEC JMMC meeting. The oil price decline in the wake of the Silicon Valley Bank collapse increases the chance that OPEC and its allies cut production further to support prices. However, the consensus is that the cartel will likely leave its stance unchanged. If the banking crisis proves to be temporary, the effects on oil prices should be short-lived, meaning less need for OPEC to act. If SVP is a sign of impending US recession, then OPEC might need to cut production in response to the lower expected demand. Number 4, non-farm payrolls. As usual, non-farm payrolls is released on the first Friday of the month. In February, the US economy created 311,000 new jobs, much higher than the 224,000 expected, though down from the huge 517,000 in January. For March, the consensus is again for a rise of around 200,000 jobs, showing the ongoing resilience of the US labour market despite inflation and higher interest rates. Still, employment appears to be less of a consideration for the Federal Reserve than inflation and potential banking crisis, meaning any effects on the US dollar could be short-lived. Number 5, ISM PMI data. There is now an unusual consensus that there will be a recession in the US this year, though there is a bit more deviation in opinion about its severity. For that reason, the more forward-looking PMI data will be closely watched. Manufacturing is expected to go deeper into contraction territory from 47.7 to 47.3, while services are expected to improve to 55.2 from an already strong reading of 55.1. As always, you can click on the link in the description just below to see the full economic calendar with the previous month's data and the consensus expectation for this time. But for this week, thanks everyone, good luck trading this week, and remember to please smash that like button and hit subscribe so you don't miss more content like this when it's released.